The real estate market is crashing. Not yet, but maybe soon, I think. Guys, what's going on with the real estate market? People have been talking about a crash for, well, always, literally since 2008. But it feels like for the last couple years since 2022, everybody is screaming crash. Well, in this video, I'm literally going to tell you what is going on as an insider. Not only have I been a real estate investor since I was 18 years old, but I own a top 1% wholesaling brokerage. What does that mean in plain English? I sell investment properties to investors. I get homes from desperate, motivated sellers for quick cash and sell it to investors who are hungry to do fix and flips or new builds. So I have an insider look. I have a sentiment radar and a gauge that nobody else has. And I'm gonna tell you what I see this month. This is my monthly real estate market update. I hope you enjoy it. And if you do, make sure to hit that subscribe button. I usually talk real estate wholesaling and creative finance investing, but sometimes we like to talk about the market. And what I'm seeing is very interesting. At my company, we're slowing down on deals. Your fix and flip investor is disappearing and your buy and hold investor is gone. But there's one type of buyer who is staying strong and actually increasing, which completely surprised me. At my wholesale company, we usually sell a deal a day to investors. I'm talking literally ugly homes. Actually, let me just show you. Take this beautiful house on Shadow Way here in Dallas, Texas. It's nice. They completely flipped it. Somebody came in and spent a fortune. Well, when we sold them the house, it didn't look like that. It looked more like this. Dude, look how ugly this house is. It's not even recognizable. We got the house under contract for $340,000 and we quickly flipped it for $350,000. We made $10,000 and the investor bought the property at probably, I don't know, maybe 78, 80% ARV, put some work in, and the investor got a property probably around 80% of ARV minus repairs, fixed it up with hard money and sold it and made some profit. That's the business of fix and flipping. They take houses that are not livable. They get them cheap at a discount for cash. They take on a lot of risk. They put a lot of money into these homes. They make them beautiful for an end retail investor who's going to go to your Bank of America, your Chase, your Wells Fargo and get a typical mortgage. But what's the problem right now, guys? Let me show you with the data. Here are new listings in the US. The orange line is the one we care about. You can see this is higher than in 2023, but it's not higher than in 2022 and 2021. So Max, that's not a big deal, but it is higher than last year. Okay, so we have new listings up a little bit from last year. What I also find interesting is that off market in 2 weeks, homes that are selling fast is down. But Max, median sale price is at an all-time high. The market's booming. What the heck are you talking about, a real estate crash? House prices just hit a new all-time high. Yeah, but listings are going up and they're not selling as fast. Don't believe me? Look at the median days on market. How long does it take for a property to sell? On average in the US, it's 31 days. But guys, this is the scary thing. Price drops are skyrocketing. Sellers are cutting their prices. Your typical normal family that's selling their house is cutting their price. But guys, that fix and flipper, they are cutting prices. There's a fix and flip right next to my rental property and they keep cutting the price. Actually, wait, why don't I just show you? Look at this beautiful house. I mean, dude, they spent a fortune on it and they actually did a really nice flip. It's not my style, a little bit too white for me, but dude, this is a high quality flip, we can all admit. This is an extremely desirable area and they just did a 15K price drop. But what's more interesting is that right before that, they did another 15K price drop. And Max, you might be saying it's only 15K. Guys, this is happening everywhere in the real estate market, but especially in some specific areas. The real estate market is very location dependent. Some areas are still going up. Right now, Las Vegas is booming, which is bringing up all the other data. But you got areas like Dallas, Fort Worth that are struggling. Austin, that's in shambles. Many locations in Florida, especially Miami. I'm scared for Miami with the insurance. The average insurance price in Miami, guys, the average a person pays for home insurance in Miami is freaking close to $1,000 a month for insurance. You know, I pay close to $1,000 a month in property taxes on one house here in Texas. It's a nightmare in many locations. So yeah, the data may not look terrible if you look countrywide, but if you look at specific locations, we are literally in a full real estate crash. We're in inning number like 4. The market is turning and it's heading down in many locations. Keep an eye out for those locations. Like Nashville is going to be struggling hard. These locations that absolutely boomed during the 2020 and 2021 money printing area, these locations are most likely going to suffer the hardest. So yeah, although home prices are hitting a new all-time high, guys, let me also explain that that's brought up by the rich, the 1%. The homes that are over $1 million, your average house is, 400 something thousand dollars. The houses that are over $1 million, the rich people are not infected by inflation. They actually benefit from inflation. They benefit from money printing. Their asset prices go up. Their stock prices go up. Their Nvidia goes up. Their Bitcoin goes up. All these things go up, so they actually have more money. Whereas the average person has less money. They're affected by inflation and they have to pay these ridiculous interest rates. So although home prices are going up, I don't think that's a very important detail because that's being carried by expensive houses. Let me tell you, at my wholesaling company, told you I was going to tell you the insider information, guys. The sweet spot right now for wholesaling is either way over $1 million, the high end, or the extremely, extremely low end affordable, under $250,000. If you want to get into that range of like 400 to 800,000, maybe 500, 800,000 above the medium home price, it's dead. It's literally dead. We can't move stuff. And I've spoken to other realtors and they're saying the same thing. They say the high end sells. They say the low end sells. Anything in between, it's done. The middle class is disappearing. We're getting screwed by inflation. We're getting screwed by interest rate, and we're getting still taxed the hardest. And I see it in the data, and I see it in my personal experience. And if you're a home flipper, and the reason why we are having a harder time moving deals to home flippers is that they're trying to sell the houses and they see days on market going up and they see price drops going up. So we have to sell at a bigger discount. So we're going back to the sellers and we're like, hey sellers, I'm sorry. Like, I know we offered you 75% of ARV, but there's just no way I can go over 70% of after repair value. No, I'm not that motivated to sell. Well, why not? Why should I sell and go buy another house at 8% interest when this house I have is at 3% interest? So this is the problem we're experiencing currently in the market. Sellers are not yet extremely motivated to sell and buyers are losing motivation to buy. So we're at a standstill, and a standstill is not really what you want in the real estate market if you're in my business, or if you're in the real estate business. You want movement, you want transaction, you want deals. However, I have a prediction that the buyer motivation is going to keep going down and the seller motivation is going to keep going up. Unemployment's going to increase. It's already up 1%. I truly believe that we'll probably enter into a recession. Unemployment will keep going up. More people will have more pain, unfortunately. They're going to become more motivated to sell. The buyer motivation is going to keep falling until we reach a point where buyers are like, oh my God, this is a good deal. And then this is going to go up and this is going to stay high. And that's when you want to really start getting back in the business, guys. When this gets higher and you can start negotiating really good deals, start buying, start wholesaling more, preferably buy. But if you can't buy a house right now, just keep wholesaling these deals. That's when the money is made, right? It's a balanced system. When things are flat, there's no liquidity, there's no movement. So yeah, if you're a fix and flipper right now and you're paying, 12% hard money, 1% per month, and you're paying a couple points, and that's a great deal, and you're seeing price drops and days on market going up, you're going to be scared to flip and then buy and hold. At least in my area, guys, it just doesn't make sense when you have to pay $1,000 a month for taxes. It just doesn't make sense to buy a rental property and keep it in your rental portfolio. You don't cash flow. Cash flow does not exist in Texas anymore. It just doesn't. If you're doing long-term rentals, it does not exist. Then you have to get risky and do pad splits and short-term rentals and traveling nurse housing and all this stuff, which, don't get me wrong, I do student housing, but that's risky. It's risky. So why should you be fix and flipping, barely making any money and taking on all this risk on the edge of bankruptcy all the time? Why should you buy a property that loses money and there's no appreciation in sight? Oh, well, home prices are going up. Well, wait, not where I am. But I get depreciation. Okay, cool. You get depreciation. Congrats. But guys, I told you there's a spot in the market where things are still booming. And for whatever reason, that's new home construction. Now, I'm not talking to the Lennars of the world and all these big builders that are building hundreds of thousands of homes at a time. The individual home builder, the one-off home builder, we're selling a lot of lots. Surprising to me, we're moving a lot of lots. Now, what I have noticed, it's usually on the more affordable end or it's on the high luxury end. So we're either moving lots that are like 50 grand or we're moving lots that are like 500 grand, meaning that the house that's going to be built is probably going to be a $250,000 house or a $2 million house. Again, the middle's not there. But we are moving a lot of lots to new home builders, which absolutely surprised me, because if I was a new home builder right now, I'd run for the hills. I don't know what the heck the market's going to be like in 3, 6, 9, 12 months. But hey, they're buying lots, so I'm selling lots. So hopefully that gives you an idea of where the real estate market is currently at. I don't see it looking good. Some locations are going to be totally fine, guys. But other locations, I truly believe are going to get hit with a 20, maybe even a 30% price cut. If you don't think that's possible, Austin at one time had a 20% price cut, and I felt like no one talked about it, no one even really noticed. So for multiple cities to get 20 to 30% price cuts, that's not out of the normal. And I'm not screaming for a 2008 when Las Vegas goes down 70%. No, 20 to 30% is very healthy when the market went up freaking 100% in 2 years. Obviously, the market's not going to crash back down to that point because we have major inflation. That money has to go somewhere. It can't just disappear. But we need a price correction because right now it's unaffordable for buyers to buy houses. So they have the negotiation power. They're the ones getting price cuts. They're the ones hesitant to buy a house in the days on market's going up. So then you get the new home builder that's like, hey, I'm not going to flip. So then you get people like me who sell these deals and they're like, okay, I got to negotiate better deals. So I go back to the sellers and I'm like, hey, got to negotiate an extra 10K off, an extra 5% off. And then, that's how the cycle happens. And that's how home prices go down. And then if the buyers are still not there and then the home flippers are still not there, that means my company, we go back to the sellers and we get another 10K discount. And what's going to happen? You're going to see the sold data on Zillow, Redfin, Realtor.com, and you're going to say, wow, these sellers are dropping 10K, and that's going to bring the whole market down. So if you want to blame anyone on a real estate crash, blame me. Guys, if you appreciate this video, please make sure to subscribe. I make a ton of videos on this channel. It would mean the world to me if you followed me. I'm a huge macroeconomics buff, and I love y'all so much. So thank you, and have a great rest of your day. Bye. But wait, guys, before you go, if you're still here, if you love macroeconomics, guys, make sure to read my children's finance book. This book will teach kids about inflation and the difference between gold and fiat currencies. I write multiple children's books. I just came out with my second one, and it's on the Federal Reserve, Jerome Powell versus Paul Volcker, the Doves versus the Hawks. If you want your kids to be financially literate and not have to struggle through a 9 to 5 their whole life, guys, get them started young reading children's books. The link is in the description down below. I'll see y'all later.